Perfect.
This meeting is being recorded.
That is so loud. So let me just restart that. So thank you all for joining us today for our Money Mindset webinar. If you haven't joined a Dope Black Women event before, you're in for a treat, and we've got a really good lineup, and I will introduce the speakers shortly. But just to tell you a little bit about Dope Black Women, we are a digital safe space that's created for Black women to come together to share their experience, heal, learn, grow, network, and empower each other. So we engage through a number of different ways. So we've got a weekly podcast, events like this, our WhatsApp group. So our other social media platforms. If you're not in the WhatsApp group and would like to join that, just send me an email at events@dopeblackwomen.org and I'll get you added to the list. So just a little bit of housekeeping before we get started. So again, this is a safe space. So please honor and respect each other's pronouns. Please be mindful when speaking about kind of things like religion, sexuality, gender, abuse. Be yourself, which is important, and also have fun as part of this session. So everybody's on mute at the moment, which is great. And if you have any questions as we go through the session, please pop them in the chat. We have some time at the end for Q&As. So you'll have an opportunity to ask as many questions as you might have. So please pop them in the chat or just make a note of them as we go through the session. So just to give you a little bit of briefing around how the session will run. So as you know, we've got 3 speakers. We'll have a quick comfort break as we go through, and I'll tell you, flash when we're going to have that. But also, as I said, there'll be time for Q&A. So I'm just going to kick off by introducing our first speaker, Selina Flavius. Sorry, I'm tongue-tied today. So Selina is the founder of financial coaching and training company called Black Girls Finance. She is the host of a weekly podcast of the same name and is also the author of the personal finance book for Black Girl Finance, So Let Money Talk, and the creator of event Black Girl Finance Festival, which we'll like to hear some more about Selina. She's on a mission to make money conversations more inclusive, and has recently won a British Bank Award for Online Financial Influencer of 2021. So thank you, Selina, and looking forward to hearing more about your presentation.
Perfect. Hi, everybody. Thank you so much for that introduction. I'm going to start sharing my screen. Should I share the right one? So yeah, I'm not going to go over the intro again because what Leanne said was correct, but I'm Selina Flavius. I'm the founder of financial coaching company Black Girl Finance, and today I want to do a quick guide. 15 minutes is not a long time, so unfortunately I won't be able to go into lots of kind of details, but it's kind of my guide for finding a bit of financial wellness. And just to say, we all deserve to have financial wellness in our lives. So a bit of blurb, just to add on a few more things. So those in the UK, you may have seen me on ITV Lorraine's programme at the beginning of April. I was part of their Savers Squads, brought together to help tackle the cost of living crisis. And then I'm also a charity an ambassador for a charity called Surviving Economic Abuse. So, if you are into donating to good causes, the Surviving Economic Abuse charity are a really good charity that are highlighting the issue of economic abuse. For now in the UK, they're the only UK charity, so I thought I'd give them a mention. If you have a Monzo account, you can donate to them through the Monzo account. They've got a charity option or a given option on the Monzo. So just to say, what I'm going to be covering today is why your financial well-being is important and should be prioritized. And when I say I mean, we're in the Dope Black Woman session, so I'm talking about Black women in particular, and the importance of trying to ignore the financial news. I think there's a certain amount of news that we need to be mindful of and take in, but sometimes it can be overwhelming, and especially at this time of the cost of living crisis and just things coming out, it can be disheartening. But yeah, so just tell you how to kind of focus in on yourself, and it's important to know your numbers as well. So why do I talk about this stuff? So my platform is called Black Girl Finance, and the reason why I set up the platform was because I did some research into, how Black women fare when it comes to money. And I'd love to start this presentation by telling you, good news, but unfortunately there are some systemic issues that still exist and that Black women face. So when I wrote my book, Black Girl Finance, Let's Talk Money in 2020, there were loads of statistics around the gender and ethnicity pay gap. And we have had a pandemic, and we have had, lockdown, and that has exacerbated the issues, unfortunately. So, whereas we were making quite a bit of progress, not quite a bit, some progress, there's a lot of progress to be made. Because of these things have kind of moved slightly backwards. But we'll go into more details in the next few slides about the actual statistics. So I just wanted to say here, don't let social media fool you, or kind of corporate businesses with their kind of diversity squares. There are still gender and ethnicity pay gaps that do exist. And I know that we all want a soft life. I know soft life has been trending, and also, kind of luxury life as well. And it means that we have to work very smart with our money. And I don't like to say we have to work hard. I like to say smart, because, a lot of us, we may be kind of first, second generation. We've got some financial, some privileges. They don't necessarily need to be financial privileges, but we do often have some privileges that mean that, we're better off, or in a bit more further along, or got a bit of a leg up in comparison to those from the older generations and previous generations. And it could just be, having access to education. Black women, when it comes to education, and setting up businesses, we are amazing at that stuff. So like I say, for me, it's not about working hard. It's about working smart with our money. So some of the statistics, and this pertains to the UK, and some of these statistics were in the Black Girl Finance book, and I do talk about them on workshops. So within the UK, Black female graduates are paid 9% less than their white counterparts. And then also, a higher percentage of Black women and BME, so it's not just Black women for these statistics, working in the UK are employed in insecure jobs, compared to 1 in 6 white women and 1 in 17 white men. And then, due to the gender pay gap, when I was writing the book, this is one of the statistics that stood out. Women were missing out to the tune of 138 billion a year. And then when it came to the ethnicity pay gap, those from kind of Black minority ethnic backgrounds were missing out on 2.4 billion a year. And I tell you these statistics just so that you are aware of what's going on. A lot of the times we internalize things that we shouldn't internalize. There are some systemic issues that we kind of take the weight off. That feeling of, oh my gosh, I'm not putting in the effort. That's why I didn't get the promotion. I'm not working as hard as I should. But it's just so that you can take a moment and just take that weight off your shoulders. You're feeling kind of imposter syndrome. You're not getting as far ahead in your career and things. Occasionally, there are some systemic issues that we aren't in control of, similarly to how we're not in control of the pandemic and lockdown, etc. So again, I go back to why it's important for us to, work smart, be very cognizant as we navigate through our careers, and also, when it comes to negotiating salaries, and just being very mindful and strategic with how we use our money and the things that we do with it. And also, these spaces, this workshop and this gathering that Dope Black Women have created, I think it's important that we tap into these places as well. So what can we do to take care of our financial wealth? I'm a big believer of taking care of well-being. That's why this workshop was all about financial zen, and your financial well-being is super, super important. Prioritize it. Prioritize your own financial well-being so that you can be financially resilient and financially capable, and so that you can, support others if that's what you choose to do so. And I'm going to give you some tips. And then also we need to work on our mindset as well, creating that positive money mindset. And then also doing the more practical, what things can we do? And again, I think it's really wonderful and important that we are in this space together, because then we can get the hints and the tips about what things we can and should do, again, to create wealth. So part of, starting to create that positive money mindset is about ignoring some of the financial news. Not all of it, some of it is going to be valuable to you. But I think we need to be discerning about what information is actually relevant and is going to be directly impacting you on your current financial goals. Sometimes we can take in all of the news all at once, and it can become extremely overwhelming and also sometimes paralyzing. So what I mean when I say about be discerning is, for example, if you're a person that wants to get on the property ladder, wants to start investing, being aware of any government schemes that are available in the UK. We have the Help to Buy, we have the 95% mortgages. There's also the Right to Buy scheme. There's also a scheme if you're part of a housing association. So being aware of what government schemes are available, that's really useful information for you to know if you're at the stage where you want to get on the property ladder. Finding out about mortgage lenders and what rates are available as well. So reading articles about that type of thing. Credit score, these are the things that you need to be thinking about when you have that specific goal. Everything else you can kind of try and ignore at this time. And another reason why we should ignore the financial news, and I've got some headlines, some are relevant. Inflation is at 9.4% in the UK, but equally also just to say as well, some of the marketing around finances and financial products and services, for men and women are targeted very differently. And also there is a lack of diversity in some of that marketing. We often don't see ourselves in that marketing. So I've told you some of the headlines there, and like I say, focusing on what's relevant to you, what's going on. You want to improve your credit score, focus on the news about that and what things you can do. You want to get on the property ladder, you want to start investing, you need to know about what can I invest in, what is investing, rather than kind of everything else that is going on in the world. So just to recap, and I'm conscious of time, it's a 15-minute presentation. You need to be mindful of your own money mindset, and I won't go into too much detail about mindset, but do have a think about money messages. Mindset, our financial mindsets and financial personalities are often things that we pick up during childhood, and we need to sometimes so you often have to be mindful of kind of those messages that we picked up on childhood, and examine those and ask yourself, are these mindsets useful for me now as I am? Sometimes we pick up some of the messages from our parents and caregivers, our early caregivers, who went through a different time than us. So we need to be mindful of that. We also need to be mindful about setting our own financial goals as well. And another thing to say about goal setting, when was the last time you sat down and looked at all of your financial goals? When was the last time you sat down and actually did a vision board for your life and where you're going in the next 6 months, in the next year? I know it's hard sometimes to envisage ourselves in the future, very far in the future, but these are things that we have to start doing so that we can, plan what our goals are. And then also we need to know our numbers as well. A lot of our goals will be dependent on our actual financials, our actual numbers. We should know what we've got coming in and out of our bank accounts, and we should not just know, we should be deciding what we have coming in and out of our bank accounts as well. And also, like I said, that will have an impact on our goals. We need to know our credit scores. We need to know our our kind of what's in our pension pot, I've forgotten the word for it, I've forgotten the terminology, but we need to know what's going on with our money. And then I just want to talk about some things that I would personally be working on at this moment in time. And one of the things, and I have a lot of conversations with women at different stages in their finances, and one of the most important things is to have that baseline financial stability and resilience. Another thing is to be investing. Like I mentioned on the previous slide, inflation is at 9.4%. We don't live in a time anymore whereby we get loads of interest when we have savings accounts. So we need to be smart with our money. And then also we need to think about protecting our finances as well. So there are, products and services out there so that we've worked really hard, we've built up our finances, and we've got, you know, assets and money in the bank or in our savings accounts, etc. We need to make sure that we're in control of where that, you know, where our assets, our hard-earned assets, end up, and also protecting us through our financial lives as well. So some examples of things that you can do: we can start working on things such as building up an emergency fund, sometimes called a rainy day fund. And this is cash that's really important if something was to happen, you know, you lose your job. And I think the pandemic was a really big demonstrator of how this can happen. You know, with lockdown, etc., a lot of people lost their jobs, were on furlough. So having that emergency fund prior to the pandemic, I was probably calling this, you know, a fund or whatever, but we need to get back to real basics and just make sure we have that financial stability. And then you might even add on a fuck it fund as well. And apologies for swearing. I hope that doesn't offend anybody. But at the end of the day, I go into workshops all the time, and there are women who are experiencing things such as financial abuse. There is divorce and you know, navigating divorce settlements. There are unfortunately people who, you know, suffer when their spouse passes away as well. So we need to have, or it could just be a terrible job. You know, it could be that we want to break away from our, you know, 9 to 5 and live the dream life that we want. So having these things in place is super important. And like I said, it's the traditional wisdom is having 3 to 6 months worth of expenses for you to be able to do that, to cover all of your outgoings. But then also you need to start with what you can as well. It may not be possible right now, but do start with what you can. Another thing that's important to do at this time is to tackle debt. And the first thing I like to say, particularly if I'm speaking to someone with debt, it's about how they feel about it. Not to struggle in silence as well. I was on a kind of webinar from the Citizens Advice Bureau, which is you know, an organized support organization in the UK, and they were saying that with energy, you know, fuel costs increasing, that the most support and advice they're giving is for energy costs, and that's across the board, and they're seeing energy rising rapidly, and they're having to provide support. So don't struggle in silence. Speak to your creditors as soon as possible and try and make a repayment plan. At this time where we've had the pandemic, we've had you know, we've got the cost of living crisis. There's a massive big focus in the UK on vulnerable customers. So you do deserve to be treated, you know, with respect, dignity. Try and, you know, deal with it as soon as possible, or get in touch with your creditors as soon as possible, rather than letting the problem snowball. Try and get a handle of it. And then also do some research on repayment strategies. I talk in the book about the debt avalanche and the debt snowball strategy. You know, they are strategies that people have been using to get out of debt. And then another big thing is I want us all to be investing. There is a huge investment gap in the UK between men and women. And also it was one of those things that I saw when I was writing the book. And so, for example, when I did a chapter on pensions, it was very clear that for those who were were Black, they tended to have less private pensions. So there is the workplace pension, you may have an estate pension, and a lot of people from Black minority ethnic backgrounds relied on the state pension. And then also there's also a gap seen between men and women, and there's also gaps seen between no, that wasn't what I was going to say. There was also a gap seen. Some of the risks when it came to pension wealth were being from a Black, Asian, minority ethnic background, being a single female, and then also renting as well. There are some kind of indicators of those who will be in pension poverty. So pensions are often invested somewhere, particularly if you have a not a defined benefit contribution, but the other pension, it's based on the stock market. So your pensions are invested somewhere, and then also you do have the option to open up savings accounts, and I'll go into that in a bit more detail. And then also we need to be thinking about investing for the long term. So pensions obviously is money set aside until you gain access to your personal pensions in the UK at age 55, and then a state pension at age 67 plus, and who knows what age it will be when we come to retire. But these are long-term vehicles. And then also one thing that I didn't put down is that when you are investing, you need to think about investing in a tax efficient way as well. So in the UK, we have access to ISAs, so individual savings accounts. So use those. You get, you're allowed to invest up to £20,000 without paying kind of tax, capital gains tax, etc. Invest an amount that you can afford. So it's important to know your numbers. Again, back to that point, do your budget, know what numbers you have spare to be able to invest, and then also choose a platform. So it's never been easy to invest. We have access to lots of platforms, whereas before, your only choice was to speak to a financial advisor or have lots of money to invest on a kind of platform. Now we have robo-advisors. You can do it yourself. You can go onto an investment platform and invest. And if you do want to speak to a financial advisor, make sure that you are, speaking to an independent financial advisor, not one that gives kind of restricted advice. And that's the same thing we'd say if you're looking at investing in things such as property. You want to know what's available across the market. But yeah, I'm a big advocate on women investing, and Black women in particular. And then protection. So 42% of people in the UK with mortgages have no life insurance. And then I had a stat from the US, 41 million people in the US say that they need life insurance but don't have it. 81% of mortgage owners have no income protection, and income protection is, you get money or a sum of money each month, a percentage of your earnings if you're injured and cannot work, or injured or due to ill health. And 30 million individuals in the UK don't have a will. And personal disclosure here, I'm currently going through a bereavement, and I'm part of bereavement groups, and the amount of headache caused when people do not have wills and documents like that in place, it's a nightmare. It takes things long, to settle the estate. It takes a long time. So having things in our armor that will help to, again, provide that financial stability is really important. And in the case of life insurance, if something happens to you, you get a lump sum, and that can be used to pay off the mortgage, make sure that family are taken care of and there's not hassle there, pay for funeral costs, etc. And then also I've got kind of nominations completed. So these are on things like pensions, or if you've got a kind of a life assurance policy, making sure that, pensions, life assurance, making sure that if you have the option to say who that money goes to, you set that up as well. And again, it just saves a lot of headache for family. And it's really important to talk about these things. I know that, I'm from the UK, but I have a, Black Caribbean background. I know that talking about things like life insurance, wills, and things like that, it can seem like we're tempting fate, or there's this myth that it's like you're tempting fate. But I will say these things are more important to talk about than not. And then the final few things that I wanted to talk about is, if you are working, you need to really get comfortable with having conversations about salary negotiations, making sure that you're researching pay for the role that you're going for. Like I said before, there is a gender pay gap and there is an ethnicity pay gap, and you want to make sure that as part of the preparation for any job that you go for, that you are researching pay and salary, that you go away and consider an offer, and it could just be as easy as just saying, look, I've got this other offer, I'm going to take some time and come back to you about whether or not I'm going to take the job. And if you haven't done the research into the salary, make sure you do it and then have that conversation. And then finally, if you are a business owner, again, you have to get really comfortable with talking about your pricing. You have to be comfortable with increasing your pricing as you do your job and you gain skills. The longer you've been doing the work that you do, you need to increase your price over time. I know some entrepreneurs work on a kind of time basis and how long it takes you to create something or do the work, but at the same time you need to make sure that you are, as your expertise increases, you are increasing your price in line with that. And then also it's just understanding that everyone will be your customer. Sometimes we chase down those customers that aren't ever going to buy from us. And then also, if you can in your business, it's really important to automate it. Automate what you don't need, the kind of admin tasks that you don't need to kind of do that take up your time, so that you can focus in on the kind of money making tasks. So all hints and tips to make sure you get paid your worth. And that is it. So do keep in touch. We have a great team of finance coaches as part of the business. The website is www.blackgirlfinance.co.uk. Like I say, you can book coaching calls. We also have a money tips blog, so we talk about all the news that's going on, all the finance news that's going on. But yeah, thank you so much.
Thanks, Selina. Thank you. I can see that we've got a question coming through. So please, guys, do drop your questions in the chat, and then we'll just cover those when we get to the Q&A. But for now, I would like to introduce Cleo Matlou. Cleo is a money mindset coach, helping women who are kind of emotional spenders to have a healthier relationship with money. And it's about kind of overcoming their fears, their worries, and being overwhelmed kind of, every time they think about money. Her superpower is about helping women like you conquer, their money blocks, attract financial wealth, and reclaim their birthright to become financially free. So without further ado, I'm going to hand over to Cleo, who's going to take you through her segment.
Thank you very much for that introduction. And just to give you a heads up, I have my daughter in the background who's nearly 3, so there might be occasional time I might have to shout out a yellow or a number just to keep it apprised. So, so bear with me. But thank you so much, everybody. As Tashoy shared, I am Cleo Matlou. I'm a money mindset coach at Women About Finance. I'm the founder of Women About Finance, and I really support women when it comes to their financial confidence to really start getting really deep into their relationship with money, so they can feel that they are worthy for what they want to achieve in terms of their desires and their goals. I have a very holistic approach when it comes to money, and the reason being was that I did start off from a financial education perspective, and what I found was, yes, it was great sharing and teaching the financial education knowledgeable aspects, and when it comes to money and personal finances, there was always a but. There was always something that was holding women back, particularly Black women, in order for them to really start to embody and actually feel that they feel confident in actually starting to adapt some of the practices when it comes to personal finances. The more that I actually dig deep in that, a lot of it was the 4 factors in what I actually teach, which is the money traumas and the core beliefs, the money mindset, the embodiment and manifestation when it comes to money, and then the money strategy. And I say the money strategy at the end because once you have done and embedded the first 3, the money strategy and the financial education knowledge just kind of drops out. It all starts to make sense. And what it is that we face money blocks within ourselves that are holding us back to actually really want to embody and actually execute those money strategies, those personal finance education, things that we have learned over time, not through school. That's another story. But it's things that we have slowly started to pick up through life. And in particular, I love that Selina was talking about women investing. There's a sense of fear around that, and it's understanding, what is the fear of you holding back, and it's usually inherited beliefs when it comes to investing, which is the reason why we tend to hold ourselves back. So today, what I wanted to do, something slightly different, is just take on one topic in regards to what I see a lot in women, particularly Black women, in the holistic approach that I teach within my work, in regards, and take you through a live example going through this. And the topic that I really wanted to take on, which doesn't really sound like money, but as you will see through the process, it really does relate to a lot to money. And the topic I want to talk about is taking up space. Now, I see that women, in particularly Black women, really struggle to take up space, and that really holds us back in regards to actually making money. Now, Selina did mention that there's systemic issues when it comes to many things that we face when it comes to being women, when it comes to Black women. And there's also things that we as individuals have within us that hold us back. And one of the things when it comes to this, so if we go through stage number 1 in terms of the money traumas and the core beliefs that we have, the money blocks that we have, one of the key areas that we do have struggles with is inherited beliefs when it comes to taking up space. I know from my personal experience, when my grandparents came over from the Caribbean, them taking up space was just something they was not able to do. They wasn't able to ask for what they were. They wasn't able to ask what their desires are. Just by having a job, they had to feel so grateful of that. And they didn't want to shake up anything. They wanted to just be able to take on an opportunity, keep their head down and just work really hard until they retired. Now that worked for them back then and that served them. And what happens is that we end up taking on beliefs that no longer serves us as people today. So they will be taught to us because that's all they know. But does that really serve me as a person today? And what that looks like in terms of being grateful for certain aspects, certain opportunities for you to be able to thrive and survive and do more. You don't want to be asking too much. You start to just emulate rather than create. And therefore what you're doing is holding yourself back from your personal growth and then thus your financial wealth, because you are afraid to be asking what you feel that you really truly deserve. So when that comes to the mindset piece, one of the things I want to talk more about is about the fitting in versus belonging. What we found in terms of our mindset, sorry, one second, go and sit down. What we find in regards to our mindset when it comes to money and taking too much space is that the difference between fitting it and then belonging. When we are fitting in, and I'll give an example, if you was invited to an event that you desperately wanted to get into, and eventually you get accepted, and you're like, wow, I managed to get in this space. If you go into the mindset of fitting in, you'll be thinking, what are these people going to be wearing? I need to look like them. I need to be buying things to fit in with these people. I need to be doing things and saying things to fit in with these people. So you go in, people will talk about things that you don't actually agree with, but you nod your head and you agree, and you're compromising yourself and who you are. A month goes on, the month the event comes back round, you don't get an invite. How does that make you feel? You feel unworthy. You give your power to those people. And what you will find is that you will try hard and hard you will emotionally spend to see if there's any ways that you can get in. That could be that you could be excessively spending to try and find ways to fit in that crowd, reaching out to people, going on for dinners that actually are making you overspend, and therefore you're taken away from your desires, your beliefs, and what you want to achieve. If you went with a mindset of belonging, you'd be like, okay, I'm just going to go as me and turn up as me and pick out something in the wardrobe and stand as I am and be my true authentic self. You will go, you will end up, I guess, disagreeing with some things that are being said, but you stay true to yourself. And you know that in all conversations that you had, you didn't compromise who you are, and your values and desires were not to be bargained with. The next month comes, you don't get an invite. You may feel a little bit rubbish, but at the end of the day, you didn't compromise who you are. This is when imposter syndrome really comes into play. What we find is that when we are scared of taking up space, it is an inherited belief of that play small, fit in, and then emulate what is being done around us, and then you'll be able to get the promotions. You will have a successful business like the next person, when actually the imposter syndrome starts to creep in because you're actually not being the person that you truly are. You will end up going into, like I said, dinners that you really don't want to go to. You end up spending on things that you're not really aligned to you. You end up trying to keep up with people who are not really important to you or you haven't had any deep connections to, but because you really want to fit in those spaces, which you've been told by playing it small, do what you're told, you end up then be successful. Your financial success will come through, but you keep getting passed by the promotions. You keep not getting the revenue that you want in your business. So your mindset is really, really important in actually understanding taking up space is you wanting to be your true self. And it may take a little bit longer, but knowing that you are not compromising who you are, not compromising your desires and your dreams, you will end up spending less, you'll end up staying to your truth, and eventually you'll find places that you either create or where you actually belong. And as soon as you find your place in the way you belong, you'll find that it's easy for you to negotiate for yourself, which is the strategy piece. You'll find it will be easy for you to charge the money that you feel that you are worth and desired within your business. You will find that you are feeling in true comfort of where you are. And with all that and less of that noise in your mind, you'll be able then to pick up the financial education, the knowledge, because you've got less things crowding your mind of you taking up space. You want to take up space because you know you deserve to be taking up masses and masses of space, because that's where you belong. And you don't want to compromise who you are for anybody. And just by thinking about, just by having that less of a burden felt in your body, you will feel released. Your shoulders will be lower down. You won't feel so much tension. And therefore you'll be releasing the inherited beliefs that you've had over the past and be able to let in more. And when by more, it's all abundance across your life, whether that's financial abundance, wealth abundance, love, relationship abundance. It's all about releasing things that do not serve you as a person and allowing yourself to receive. And when I see women do that, the financial wealth and the wealth in all aspects of life will expedite in a magical way. The embodiment piece and manifestation is something that cuts through the holistic approach. So when you go through each stage and you challenge your beliefs, you start to manifest and believe that I am worthy for financial success. I give myself the permission to own the space and take up space. And it's understanding how that feels, not with just in yourself vocalizing it, but how it feels in your body. And taking up space, usually, if you feel really, really contracted in saying that, it's usually your stomach that feels a little bit, oof, like me taking up space. You know, a Black woman who has power, that's seen as a taboo. It's the total opposite, actually. If you're actually able to actually teach yourself to be able to create space and take up space and be a powerful woman, then that would in itself then help with your bank balance. Because again, you're not allowing anything to compromise the person that you want to become. So that's just an example and a walkthrough of how I teach money empowerment, money manifestation. It starts with being open to release some of the stories that you have in your mind when it comes to money. And what I always say to people is the relationship you have with your money is a reflection of how you think, feel, and behave about yourself. So if you feel that you don't amount to anything, the way that you actually behave with your money will reflect back to you. So it's about actually seeing what are the thoughts, feelings, behavior that sits behind the money first in order for you to be able to actually decide, okay, this is how I feel currently. What do I need to do with myself in order for me to have a positive money mindset? In order for me to be able to release some of the stories that don't belong to me, ones that I have experienced through life or inherited, particularly as Black women, we inherit many. And I would openly say this taking up space one, every time I go through different up levels and highest versions of myself, another version of it comes through, because I know it's inherited beliefs. But one thing, the key thing of actually being open to actually looking at your core beliefs and your money traumas is gaining that awareness. So what you find is that when it does come to you and you see it appearing, you'll be able to shrink the time of you overcoming that, because you've gained that awareness and acknowledgement that it can creep up from time to time, and you build strategies around how you can actually overcome them. So I hope that kind of helps you solidify in terms of a different approach and where you can look at money. It's more of a holistic approach. It is about the financial strategy, don't get me wrong. That always happens in the work that I do and how I support women. But the key thing is to look at oneself, is to give ourselves self-love and compassion, and recognize that we don't need to fix ourselves. All we need to do is bring ourselves awareness of some of the beliefs that we have that don't serve us anymore, and how that is impacting the way that we can make money. Thank you.
Thanks, Cleo. We are going to have just a quick break, just for a couple of minutes. So if you do need to grab a cup of tea or just use the ladies, and then we're going to come back and I'm going to introduce Kalilah, who's going to take us through investments. So, please feel free to just have a break, and then we will come back at, let's just say 1:15, and then we can carry on. Welcome back, everyone. So I'm just going to introduce Kalilah and hand over to her. So Kalilah is Jamaica's leading business finance journalist, winning the Press Association of Jamaica Award for Business and Finance in 2017, 18, and 19. In early 2019, Jamaica's economy was improving and kind of the business environment and investment culture gained some steam. Kalilah noticed that there was a need for simple, easy to understand, timely business news and analysis. And she started kind of the Money Mondays JA on social media in March 2019 to provide financial education to empower ordinary people with tools for wealth creation. So she's going to talk to us today about kind of investing and, you know, what we really should be thinking about. So over to you, Kalilah.
Thank you. Thank you so much. Hi, everyone. It is so good to see people from all over the world. So like our fabulous host said, my name is Kalilah Reynolds. I'm actually joining you today all the way from Belize because I'm on vacation. I live in Jamaica, but I'm originally from Belize. So let me know, I want to know who you are. Let me know in the chat where you're joining us from and where you're originally from. So if you're in the UK, but you're originally from Jamaica or from Trinidad, let me know in the chat where you are joining us from. I really like to get to know my audience, especially when we have these virtual meetings. It's a little bit more difficult to find out, to know who you're talking to. So let me know right now in the chat. Let me check the chat. Anybody answer yet? I want to see who you are and where you're joining us from. And there's a specific reason that I'm asking as well, where you're joining me from and where you are originally from. So Niasha says she's from Jamaica. So Niasha, do you live in Jamaica as well? You're from Jamaica and live in Jamaica. Anthony says, I'm a US citizen, but grew up in St. Anne. So that's in Jamaica as well. Shan says, joining from South London, born in the UK, family from Ghana. Interesting. Nice to have you, Shan. Demi says, joining from London, UK, family is from Nigeria. And Monique, London, but parents are Jamaican. Leanne in the UK, but from Jamaica. Julia is from England, born here, but parents originally from West Africa. We also have Leanne from the UK, or in the UK from Jamaica. So I see that we have a nice mix of people here with Caribbean heritage and African heritage. And so I want to look specifically at Jamaica today. I'm going to introduce you to the Jamaica Stock Exchange, but my West African friends and my East African friends, I'm not leaving you out. I also feel that there are many takeaways that you can get from this as well. Selina is in the UK, but parents from St. Lucia and Barbados. So let me start out by sharing my screen. If I can figure this out properly, because you know how it is. Just a few supporting slides. Here we go, slideshow view. All right, hopefully you can see that. So what is the Jamaica Stock Exchange? It is simply, or maybe I should go even more basic than that and introduce you to the concept of a stock exchange, since we are talking to people right now from all over the world. So first of all, what is a stock exchange? A stock exchange is simply exactly what the name sounds like, a place where you go to exchange your stocks, to trade your stocks. Another commonly used term is a stock market, and a stock market is a place simply where you buy and sell stocks. What are stocks? Stocks are percentage ownership or shares in a company. So it indicates that you are part owner of a company. And it's a lot easier to use units called stocks to track your ownership, because put it like this, if a company has, let's say 100 shares, right? Private company, my company, Kalilah Reynolds Media Limited, has 100 shares. So a great example, a company has 100 shares, and let's say I own, and this is true, I own 80% of my company, my husband owns 20%. It's pretty easy when it comes to percentages, but if we decide to list on the stock exchange, any stock exchange in the world, and we now divide up our company into thousands or even millions of shares, it's really, really hard to track if you're going to use percentages and say, I own 0.0008% of a company. It's much easier to say I own 100 shares in a company. And that's simply why they do it that way. So since we have a more diverse crowd than I was expecting, let me just go a bit broader on what we're talking about today. So that's basically what a stock market is. And owning stock just means that you own a percentage in a company. And when you own a percentage in a company, that simply means that you are entitled in some cases to a share of that company's profits, which they pay out as dividends. And you also do well and reap the benefits when the company performs well. So when the stock price appreciates, then you're going to see you able to be able to sell at a price higher than you purchased those stocks for. And that's the objective in any business, right? If you have any buy and sell business, you're a wholesaler, you are buying sneakers for retail, you are creating a product yourself and selling it. The objective ultimately is, and let me just stop sharing because I'm going to come back to this. The objective ultimately is to buy at a low price and sell at a high price. And that is how you make a profit. Very, very simple. The objective is exactly the same on the stock market. Buy low, sell high. So how do you know what to buy and when to buy? Well, there's so many different indicators. And I also want to emphasize that right now, the year 2022 is an exceptional year because even from 2020, from COVID hit, we have been living in some exceptional times, because what we have seen in terms of the global economy is that a lot of things have fallen. Things that were once very, very expensive. We're not talking about the housing market here. That's a whole different kettle of fish. But on the stock market and on the cryptocurrency market in particular, things that were once very, very expensive came down in price. And why did that happen? Well, it happened for a couple of reasons. A lot of people, 2020, the pandemic hit, some people got laid off, right? A lot of people lost their jobs. And so if you had some money in investments, well, that is the time that they would have turned to their investments to cash out and to get some money for themselves. And if you have a lot of people selling their stock all at the same time, what is the price implication? The prices are going to go down. Classic supply and demand. So you had a lot of supply, a lot of people selling, and it was a very fearful time. So demand was low. So with a lot of people selling and a few people buying, the price naturally has to go down. And so that's where we've been in the stock market for the past 2 years or so since the pandemic hit. And we still have that going on right now where prices are depressed, quote unquote. They're at a pretty low point. So the one reason a lot of people sold or have been selling between 2020 and now is, well, some people needed income because they'd been laid off and, you know, that type of factor. And then there was also a lot of panic selling. People were just scared. They saw prices going down. They're like, oh my God, let me just get out before I lose everything. And so you create this situation where prices have been low for the past 2 years or so. And what that presents for the savvy investor is actually an investment opportunity, because you are able to purchase stocks, which is ownership in companies, for a much lower price than you ordinarily would have been able to do. And I'm not saying now to go out and just buy up any company because it's cheap. If you have a company that has solid foundation, this is a company, and in Jamaica, I give the example of NCB. NCB is Jamaica's largest commercial bank. It actually stands for National Commercial Bank. It's been around for several decades, and it's likely to continue to be around for several decades more. But since the pandemic hit, the stock price has fallen from 200 Jamaican dollars to about 100 Jamaican dollars. So it's been cut in half. That is a company that's still making profits, that is still hiring, that is still going to be around for decades to come, but the stock price has fallen virtually in half, right? And so for people who believe that NCB is going to continue to make a profit, this presents a great opportunity to get in on that stock at a much lower price. And I specialize in the Jamaican markets because that's what I report on the most. And so most of the examples that I speak of today are going to be about Jamaica, but these principles can be applied anywhere. So if you're in the United States, if you're looking at the FTSE 100 in London, it's the same principles. So you want to look for companies that have a solid foundation, but their stock price has been down primarily because of the pandemic and because of the panic that has, you know, continued to ensue over the past couple of years. All right, so for those of you who are in are from Jamaica or in the UK now, or you are looking for investment opportunities, I now want to introduce you to the Jamaica Stock Exchange. And feel free to leave your questions in the chat as well. You know, we do have a question and answer session coming up. So let me introduce you to the Jamaica Stock Exchange. So Jamaica Stock Exchange, where do I control this from? I think I have to go back in my slideshow. How do I control? Okay, here we go. So in 2015 and 2018, Jamaica had the top performing stock exchange in the world. And I know this is gonna surprise a lot of you because you're like, Jamaica, like that's random. Jamaica had the top performing stock exchange in the world for 2 years. So according to Bloomberg, the Jamaica Stock Exchange, which we call the JSE, skyrocketed by 80% in 2015. So what does that mean when the JSE skyrockets by 80%? It means that if you put in $100 or 100 pounds in the Jamaica Stock Exchange at the start of the year, at the end of the year, on average, you would have 180 pounds. So if you put in 1,000 at the end of the year, that would have been 1,800. If you put in 10,000 at the end of the year, that would have been 18,000 pounds in that short space of time in 12 months. So that's what happened in 2015. And that was the #1 performing stock exchange in the world with an 80% return on your money. And 23 Jamaican companies saw their value actually double. And then in 2016, the JSE grew another 27%. So 27% is pretty darn good as well. When you look at, average returns overall, you're usually looking at 10, maybe 15% on the stock market. If you're really aggressive, you can go 20, you can go 30%. So in 2016, the JSE grew another 27%. And then in 2018, the Jamaican stock market just really took off and it grew 233% in 1 year. We're not talking about an individual company here. We're not talking about an outlier. The entire market, the average was 233%. So if you put your money in, let's say, an index that tracks the entire market, if you put in 100 pounds at the start of the year, by the end of the year, that would have been worth 333 pounds. If you put in 1,000 pounds at the end of the year, that would have been 3,000 plus. If you put in 10,000 by the end of the year, that's 30,000 plus in just 1 year. And so a headline article in Bloomberg read, Jamaica's spectacular stock market rise is the world's biggest over the last 5 years, and it shows no sign of losing steam. They didn't predict COVID would come 2 years later though, so there was that. So here are a few quick facts about the Jamaica Stock Exchange. It was established in 1962. We had about 100 companies listed, or have about 100 companies listed right now. Market capitalization is about $13 billion US. That was in 2019, so I'm sure it's significantly more than that now. Market capitalization simply means the value of all the companies collectively listed on that stock exchange, because there are big companies listed like an NCB, and you also have pretty small companies that are listed, which we'll talk about shortly as well. So like I said, it was a top performing stock exchange in the world for 2 years, and the vast majority of stocks on this exchange actually cost less than $1 US, which probably is surprising to you as well, because remember, we're dealing with Jamaican currency and the exchange rate is 150 to 1 US. More than that, it's like 153 right now to 1 US. So if you see a company listed for 100 Jamaican dollars, that's less than $1 US. And in the past couple of years, especially, we've had new listings, a lot of new listings coming on, not just from Jamaica, but from other Caribbean countries. So the rest of my Caribbean peoples, those who are on from Trinidad, from St. Lucia and so on, we have companies from Trinidad in particular that are now listing on the Jamaica Stock Exchange. Why? Trinidad does have their own stock exchange, the TTSC, but it's not as active as the Jamaica Stock Exchange. There is this vibrancy in the Jamaica Stock Exchange over the past 7 years or so, and especially over the past 5 years. And we're not getting that same vibrancy in Trinidad. In Trinidad now, if you buy shares in a company, there's not much trading that happens. So if you suddenly need to sell, it might be difficult to find a buyer. So that's what we talk about when we talk about liquidity. That's what we mean when we talk about liquidity. Are you able to sell when you need money? And on the Jamaica Stock Exchange, that is a lot more possible than on other stock exchanges. So if you want to do a quick investment, turn your money around fairly quickly, set some aggressive timelines and aggressive investment goals, the Jamaica Stock Exchange is a lot easier to do that than on other stock exchanges in the Caribbean. So you do have the Trinidad and Tobago Stock Exchange, you do have the Barbados Stock Exchange, even the Eastern Caribbean, the OECS countries have the Eastern Caribbean Stock Exchange, which collectively lists, I notice it's mostly like government entities, government companies that are listed on that stock exchange. And through that, you can buy shares in various government companies. I'm not sure if they have any private ones on the OECS Eastern Caribbean Exchange, but you can Google it. So there are opportunities here to invest in your home countries. And this is applicable to my friends from Africa as well. When you think about investments, most often what you probably think about is FTSE 100 there in London, the NYSE, New York Stock Exchange. You're thinking about the Dow Jones and the, what's the other popular one? The NASDAQ. You might be thinking about the Nikkei in Japan and maybe a couple other major global exchanges, but you should also be looking to your own countries for what investment opportunities are available there, because emerging markets present a huge opportunity, especially when you have a country that is turning around like Jamaica is. So this was just a headline from, this was on the Jamaica Stock Exchange's website, saying that market capitalization surpassed the $2 trillion mark. This was in 2019, and 2 trillion Jamaican dollars, about 13 billion US. So it has exceeded that since then, because we've had some new listings as well. And this was the Bloomberg headline: "Welcome to Jamaica, home of the world's best performing stock market." It says the Jamaican Stock Exchange is so obscure, even emerging markets funds don't go there, and they are booming. And that article was written in 2019. So why did the JSE suddenly start booming? Because like I said earlier, you might think Jamaica, that's kind of random. Why was that the top performing stock exchange in the world? And some of you might find this relatable when you think about what's going on in your own countries as well. Jamaica has had a stigma, and it's been somewhat well-deserved over history, as being a country that was mismanaged, that was very highly in debt, and that there was a significant amount of corruption in. And I'm not saying that those things have completely been eliminated. No, in every country, there's going to be some level of that, right? But at one point in time, when you think about Jamaica in the 70s, for example, and in the 80s, there was, I mean, these things were at an all-time high. Jamaica was extremely highly in debt. Jamaica has been through, over the decades, multiple IMF programs, meaning the IMF had to come and rescue the country, had to give this country a monetary bailout because the country had no money. And when you go to the IMF, it also means that you have to adhere to very strict fiscal conditions. You have to be very, very, very disciplined. So think of it like your own household, right? Your own personal financial situation. If you are extremely highly in debt and you need somebody to come bail you out, to come rescue you, somebody, especially if they've done this for you multiple times before, they might set down some conditions, because when they're bailing you out, it's not a gift, it's a loan. They say, okay, I'm going to lend you the money to help you make ends meet, because I know you have all this debt, you have all these repayments you need to make, but I still need to get back my money. And in order to ensure that I get back my money, I'm going to put you on this very strict spending plan. And you're going to have to cut back on this and cut back on that. And in the case of Jamaica, they had to cut back on wages and salaries, which means that they had to fire people from the public sector. You have to cut back on social spending and a lot of things that would have helped the country develop. And so these programs have been very, very difficult. And what ended up happening most of the time is that the country just couldn't deal with it. And they ended up backsliding, and they ended up not completing the program successfully and ending up even worse than where they started. But in 2012 now, And there was a lead up to this even before that. So probably from around 2010, the country reached a debt to GDP level of 150%. What is debt to GDP? So debt, you guys know what debt is, and GDP, which stands for gross domestic product, is how much money the country makes in a year. So imagine in your personal financial situation that you are bringing in 10,000 pounds a year, but you owe 15,000 pounds, right? You owe more than you're making. And even on a payment plan, it means that it's just not sustainable. So you barely have anything left for food, because if you said that, well, I'm going to repay this 15,000 pounds over 3 years or 4 years or 5 years, you still have a big chunk of your salary every month that's going towards the debt repayment, principal and interest. And then you only have this tiny little bit left to live, to pay your bills, to buy food, pay your rent, car notes, whatever other bills that you have. And that's the situation that Jamaica was in. Debt to GDP was 150%. They went to the IMF again. The IMF said, okay, we're gonna bail you out again, but the conditions are gonna be extremely strict this time. And what actually happened is that for the first time in the 60, how many years this year now? 60 years, yeah, since independence, in the country's 60 years of independence, at that time it would have been about 50 years of independence, this was the first time Jamaica actually successfully completed an IMF program. So they stuck to the program, stuck to the script. It was very hard because public sector workers were angry that their salaries had to be cut, and prices were getting higher and they couldn't afford it, but they stuck to it. And in 2016, they finished that program, started a new just-in-case program called an extended fund facility in 2016, and that took us to 2018. And following that, and during that period, we really started to see the economy turning around. We had transparency and accountability for probably the first time in the country's history. You had the Economic Program Oversight Committee, EPOC, which is a group of people from the private sector that were overseeing everything that the government did and reporting back to the public every 3 months. And so you had all of that going on, and you started to see the physical manifestations of the change. You started to see construction boom. Everywhere you look in Kingston to right now, everywhere you look, you start seeing buildings going up. Like, where are all these buildings coming from? You start seeing signs of development. You start seeing roads being built, bridges being built. You see more social spending. And then within that period as well, at the end of the IMF program in 2016, the Jamaica Labour Party won the election under the campaign slogan, poverty to prosperity. So their objective and all their objectives, the primary objectives during their first term, were trying to take people and the economy from poverty to prosperity. And so they developed policies that went towards that and to help to accelerate that. And I'm not saying that it's perfect, because there's still much to be desired, but it has been a start, and we have begun seeing the tangible effects of that on business and the economy. So that's the Prime Minister Andrew Holness in front of his campaign slogan, poverty to prosperity. And so what has been the result is that we've seen unemployment now at a record low of about 6%. And for those of you in developed countries, you might be saying, whoa, 6% is high. It's like 3% for us. But for Jamaica, it's low. Because for Jamaica, about 2 years ago, well, probably about 4 years ago, unemployment was at 12% and 14%. And so coming down to 6% for us is a historic low, actually, since this type of data started to be recorded. We've also seen debt to GDP, which is, I told you how much money you make versus how much you owe, reduced to less than 100%. And it would have been lower, it's like 90 something now, it would have been lower if it wasn't for COVID. So coming from 150% to less than 100, even with COVID, is an accomplishment. It would have been probably like 80 something percent by now. And because, COVID just threw a monkey wrench in all of that. And then we've also seen more social spending. So we've seen benefits for like welfare programs improve, schools getting more assistance and stuff like that. So we've seen a lot of transformation in the economy. So why now, and why Jamaica? Well, the best opportunities are in a recession. So you would have heard the latest numbers come out of the United States. I don't know what the data is on the UK, but the United States is now officially in a recession. So 2 consecutive quarters of negative GDP growth constitutes a recession. So now this is now their second quarter where they've had, quarter simply refers to 3 months, where they have had negative growth. So they are officially in a recession, and that's coming off COVID, that's coming off, high inflation. It's coming off so many different things, and inflation is also another thing that we need to talk about. So why now? Look at inflation, for example. Here in Jamaica, inflation currently is about 11%. So how does this impact your pocket and what you are, doing with your money? If you are saving your money, can anybody guess? And does anybody have an idea what the average interest rates on on savings accounts are? What is it in the UK? Tell me in the chat, what is the average interest rate on inflation? Does anybody know? On savings. What is the average interest rate on savings? So if you put your money in a bank, you say you're going to save towards a particular goal, how much interest do you get? Somebody says savings roughly 1%. Leanne says 0.2%. Anthony says, I think it's like 0.05. Another person says 1%. Yeah, you guys are right on the money. It's like less than 1%. If you're looking at a high yield savings account, they're giving you like 2%. If you get 3 and 4, that's probably a fixed deposit where you have to keep your money in the bank for a specific period of time. You're not allowed to touch it and if you do withdraw early, then you're going to face penalties. And then they might give you 3 or 4% interest. But if inflation is at 11% and you're earning 1% in interest, then your money is not worth what it was last year. And you guys know this. When you go to the supermarket right now, you cannot buy the same amount of things that you used to buy with the same amount of money a year ago, even a few months ago. And so when you are saving your money, you are actually losing money. And that's something that you guys just really need to start wrapping your heads around. And I'm not saying savings is bad, because you do need emergency savings, but anything beyond emergency, you need to be investing. And the stock market is one of the most accessible places for investments. So if you are looking at trying to build wealth for yourself, you're never going to be able to save yourself into wealth. You need to actually make your money work for you and make you more money, because you can never A, save yourself into wealth, and you can never B, work yourself into wealth, not true wealth anyway. Because think of all the athletes and entertainers who accumulate a lot of wealth and a lot of money in a very short time. And then as soon as they retire or they get injured or something happens and they're no longer hot, all the money is gone. They've lost all of it. So they were able to accumulate money, but it wasn't true wealth because they didn't put the money to work for them to make them even more money, even in their sleep. So how do you make more money? How do you truly build wealth? Well, it's through ownership of assets. You've got to invest that money. You can invest in something like real estate, solid asset class, and that's the thing that most people gravitate towards. You want to own a house, you want to rent some apartments. People tend to gravitate towards that because that's what we know, and that's how we were raised. We were raised to work hard, get a job, buy a house, and that's the key to wealth. But in today's economy, it has been increasingly difficult to buy a house because house prices have skyrocketed, and there's so many other factors that have been contributing to that as well. And so you have real estate being one avenue towards wealth. You have entrepreneurship being another great avenue towards wealth, but not everybody has time or patience to be an entrepreneur. Entrepreneurship is going to take up all of your time if you truly want to build a successful business. And even if you're doing it on the side, it might take several years for you to really reap the benefit from your investment in your enterprise, right? But when you look at the stock market now, that asset class is really accessible. It doesn't take up much of your time, and it doesn't have to take up much of your money. It depends on how much you have. You can start with very little money, and that's a big misconception that's out there. A lot of people think that the stock market is for rich people. They're like, oh, I can't invest in stocks. Stocks are, that's for rich people. But I tell people all the time, the stock market is not only for the wealthy, it is how you get wealthy. And it's where the wealthy do put their money to create more wealth for themselves. And it's what you need to be looking at as well. Look at the stock markets in the country that you live, and look at the stock markets in your countries back home as well. It's about investing in businesses that are going to give you a return on your profit. And like I said, it is very easy and accessible to get started. You can start with 10 pounds, whatever you have. It really depends on your broker. You have brokerage firms that are very, very accessible, that make the opening requirements very easy. You just need, your ID and a few documents in order to open that account and put whatever money you have in there. You do not have to wait until you accumulate a large amount of money. You do not have to wait until you have 1,000 pounds to invest. Just start with whatever you have and then continuously invest. So every money, put a percentage, put a portion of your earnings towards your investment so that it can continue to grow. It's really, really accessible, and it's not as difficult as you may think. So that's why now. And then why Jamaica, or your home country. When you look at Jamaica, like I told you about, the background and what this country has been going through over the past 10 years, the transformation, it's really a burgeoning economy. So if you're thinking about investing back home, now might be a good time, because if the country continues on this trajectory, we are going to see Jamaica really emerging as a player, a pretty solid player in the next 10, 20 years. And if you're investing for retirement, and retirement is 20 years away, imagine what that investment now is and what it's going to be in 20 years if we continue along this trajectory, which I think is very likely, because Jamaica has been so scarred and bruised over the past 60 years that I don't see this country turning back. But of course, there is risk. Every investment has risk. The political climate could change, people could backslide, and that's a risk that you have to take. But I see the outlook for this country being very positive. So where are the opportunities right now? And this is talking specifically about Jamaica. So Jamaica has a junior market and a main market. Like I mentioned, you have both big and small companies listed here. So you have your NCB, which is a very big company, but you also have very small companies. And those of you who are joining us now who are from Jamaica, you might recognize some names. Maybe you won't if you haven't been here in a long time, but Lasco Manufacturing. You have more recently, iCreate is an educational company. You have Fesco, which is a gas station, a chain of gas stations. You have Spur Tree Spices. So if you're from the islands, you might know Spur Tree Spices because they do export to the UK. So you might have seen Spur Tree Spices jerk seasoning. They're now listed. They just listed this year. And it's really interesting what has been happening with a lot of the smaller companies which go on the junior market, flocking to the stock exchange to list. And why they've been flocking to it is that they get tax benefits when they list on the junior market. So they don't have to pay 100% of their income tax for the first 5 years. They pay zero income tax for the first 5 years. And then the second 5 years, they pay 50% of their income tax. So the government has incentivized companies to list, especially on the junior stock exchange. And we have seen tremendous returns there in the past couple of years. So the main market has been down, like I said, and this is globally, stock markets have been down. But in Jamaica, even while the main market has been down, the junior market has been performing exceptionally well. And you're getting an average 30% return when you invest on companies listed on the junior market. And then another opportunity that we always look out for is IPOs. IPO stands for initial public offering. And what that is, it's simply the first time, the initial time a company lists or goes public, makes their shares available to the public for sale. So it's very, very simple. And we've been seeing IPOs in Jamaica being very, very successful. There's been a lot of demand and limited supply, especially on the junior market. Because these companies are small, the number of shares that they're able to sell is not huge. And you have this huge demand for a small amount of shares, and that creates, that leads to the stock price going up very, very rapidly. And within a couple of weeks, people are making a lot of money on the stock exchange. So I'm coming to the end of the presentation. How do you invest? It can be done remotely in many instances. All you need, at least here in Jamaica, is a taxpayer registration number. So that would be equivalent to Social Security in the States. I'm not sure what it's called in the UK. You need an ID, you need a proof of address. Even if it's abroad, you need to show your source of funds, which would include, could be stuff like bank statements, and you're gonna need a couple of character references. And if you are interested in investing here, then you can check out my broker guide, which has a list of all the 14 licensed securities brokers in Jamaica with a comparison of each, and that is free when you subscribe to my newsletter at kalilahreynolds.com/newsletter. I also have an Investing for Beginners masterclass, which just breaks down all of this in a really simple manner. I do use mostly examples from Jamaica, but as I've done in this presentation, the information is relevant anywhere you are. So even though the examples are here, you can apply this to any stock exchange. So if you have very basic or limited knowledge, this is a great place to start and to start learning, what to do, what to look for, and how to start your investment journey. So I do see that we have some questions. So let me throw it back to our moderator, and I hope you enjoyed that presentation.
Oh, thank you so much, Kalilah. There was so much nuggets in that. So one of the first questions, this was posted earlier by Grace. So she wanted to know kind of what investment platforms would you recommend for someone investing for the first time? And also if there's like a suitable minimum amount that you would recommend for starting with.
Right, so the minimum amount is whatever you have. So it really varies by broker. Some brokers require you, and in order to invest, you do need to have a brokerage account wherever you are. Jamaica has brokers, the United States has brokers, the UK has brokers. Fine, just go on Google, search up UK brokers, just Google UK brokers, find out what comes up, what are the most popular ones, and find out what their opening requirements are. So depending on where you go, some might require you to start with £1,000. Some might have no minimum opening requirements. Here in Jamaica, the minimum there are some brokers that will allow you to open an investment account with no money. So you can just open up the account and put money in it later. There are others that their minimum is $1 million Jamaican dollars, which is like almost 10,000 US dollars. So it really depends on which broker you go to. So if you don't have a lot of money, then you want to find a broker that will allow you to invest with very little funds. So I'll just say, start with whatever you have, and whatever it is, there is a broker that will meet your needs.
Just a quick question around for you, Cleo. So it's about kind of negotiating your own space. So how do you go about doing that? If you're maybe
your space, what do you mean?
Sorry, this question's for Cleo. So
Cleo, sorry.
Yes, sorry. Just around kind of your like your particular space, how do you juggle? I guess if you're not maybe sure of yourself just yet, as you mentioned, how do you kind of navigate that with your finances?
That's a really good question. So the way that I would see it is to understand where some of the beliefs are in regards to owning and taking space. If that's what your incentive and an initiative to want to do, and see that that's actually holding you back from actually creating wealth, being able to increase your salary or increase the revenue coming into your business, it's just being aware of some areas of your life where you're finding that it's holding you back. It could be taking on somebody else's beliefs. It could be you living into somebody else's life rather than your own. Particularly being a Black woman, it's like you have the stereotypes of being a strong Black woman and that being intimidating and things like that. And it's actually unpacking, actually, is that really serving me? And if that's the case and that's not serving me, then what do I get to do to choose differently? How can I actually reverse the way that I feel and think and behave when it comes to people's outward opinions of me, and start with the self-love of myself? You know, what is it going to do for me to actually step into the person that I want to be without the need to have to take on everybody else's baggage? So, you know, I would say for the first thing is to actually start to think about what is it that you want for yourself, rather than inheriting other people's thoughts about what you should be doing. And then within that space is then you can start to own the space that you desire, and then feel more comfortable to actually live into the goals that you want.
Oh, thank you. I know, Cleo, that you have to drop off for a hard stop at 9.
Yes.
Kalilah, Selina, I'm not sure if you were, you know, able to hang on for a little bit and take some other questions. Is that okay?
Sure.
Yeah,
Oh,
I can.
thank you. Oh, thank you, Cleo.
It's all right, no worries. And if
thank you
anyone's
so
got
much.
any questions, happy to take some and in DM on my IG at Women About Finance. If you do have any questions from this cohort or anybody on the replay, do make sure you reach out to me on IG in the DMs. Thank you so much for having me.
Thank you so much, Cleo. You have a good evening.
Take care. Bye.
Thank you. So we're just going to do a couple more questions and then we will wrap it up. But Kalilah, I think you've started off something with kind of investment for everybody. So there's lots of questions in here about kind of, you know, how would you go about investing in Jamaica? But you've covered that in terms of the stock market, and you've mentioned it's about looking at your home country, because I think the person did ask about the African stock market as well. So I guess it will be looking at your home country. What was the other question?
Right, I see a related question about which financial service companies would you use. So here in Jamaica, in order to invest in the stock market here, you have to open an investment account here. So you won't be able to go through the ones that you've listed, but you are able to do it remotely for some companies. And that's why I was recommending my broker guide, because that gives you a list of the companies locally that allow you to open that account remotely. So you can do it online or via email, or some of them can do it over the phone, but you do need to open an investment account in the country that you want to invest in.
Oh, thank you. So this question I'm going to put to both you and Selina. You know, what's your views on cryptocurrency? So I remember, Selina, on one of your slides, you had things for us to kind of ignore. So did you have any kind of comments on it? You know, so many people, oh my gosh, crypto is going to be the thing that makes me a millionaire.
Yeah.
You know, what's your view on that?
I just think, you know, I mean, I think if you want it to be part of your investment portfolio, think about an amount that what percentage you want it to be a part of, but, you know, being aware that there are more stable investments out there. So I think, you know, obviously my slides was all about, you know, building an emergency fund, and I did talk about investing. You know, there are, you know, you can invest in the stock market, as Kalilah's mentioned. You know, there might be property, there are more bonds as well. You know, there are more stable investments. I mean, I've spent the last 2 years, I'm a mum of one, and my son, he's a teenager, and he was well into crypto and part of crypto WhatsApp groups and all of that. And my biggest thing for my biggest message to him was, okay, that's fine. If you want to invest in crypto, that's fine, but you need to get the financial, the baseline set, and you need to make sure you've got your pension. You need to make sure you're investing in an ISA, you know, property. Those are the things that are a bit more stable. So having it as a little bit. And if you, I mean, what's interesting about crypto is that there are you know, number one, in the UK, you know, if you're speaking to a financial advisor, they can't really advise you to invest in crypto. And number two, you know, there's a little bit of crossover to the mainstream kind of financial companies. They're looking at it. Even you know, the UK, the kind of Bank of England are exploring it, although they are sending out really clear messages that, you know, if you do invest in crypto, you need to be prepared to lose all of your money. But I mean, in terms of the technology side of it, there's obviously, you know, the blockchain, you know, NFTs that we've seen, contracts, all of that kind of thing. There's something there. So, you know, obviously at this moment in time, crypto's gone down rapidly. So has the stock market. But I mean, if you've got it a little bit in it. I don't think there's anything wrong with it. I do think that, you know, women need to be abreast and up to date with whatever's going on in the financial markets, new products, new services. You know, as they develop, need to be knowing about it and making a choice about it. But I mean, I wouldn't put everything into it, basically.
Yeah. Thank you. Kalilah, any comments on that?
Right. So I'd like to co-sign on everything Selina just said. And let me just add a couple words here. If you're going to do crypto, your heart have to be strong. You have to have a very strong heart. If you are prone to heart attacks and strokes, do not invest in crypto. You have to, because crypto is so volatile. It's like up and down and up and down and up and down.
Yeah.
And like the person in the comments was saying, this time last year, one Bitcoin was like 60,000 US, and now it's like 20,000 US. So from 60,000 to 20,000 is a significant crash, right? It's fallen to about a quarter of its value that it was last year. And then like a couple of years before that, it was way down again, and then it just went way up, and then it's now way down. So your heart has to be very solid if you are gonna do cryptocurrency investment. And the other cryptocurrencies that have followed stream, because Ethereum is the other major one, is the same thing. It's gone from like 20,000 to like 2,000 in the space of a year. And so if you're gonna do it, the key, and Selina mentioned this, is that you need to diversify. So don't put all your eggs in the crypto basket. Diversify and make sure that you have other asset classes. So when you are doing your investment portfolio, you do want to have something that's aggressive, that's high risk, and that's going to be the cryptocurrency portion of your portfolio. But then you also want to moderate that with something that is lower risk. So you might put that in bonds, for example, which tend to be much lower risk, or you might put that in a real estate fund, which is a lot more stable. But then depending on your investment profile and your personality type, you need to decide how much of your money you want to put in this high risk asset, which is cryptocurrency. So and you also need to do your research, which Selina also touched upon, because there are some fundamentals there about cryptocurrency, which make me believe, or lead me to believe, that crypto will be here to stay. And even though it's crashing, it's not going to zero. So you still have some value there. And depending on what type of cryptocurrency you're investing in, they have different uses. So Bitcoin is mostly used as a store of value. Then you have others that are what I call stable coins, which are used to trade and to purchase things with. Ethereum is, I don't even remember what the uses are for, because they have some that are for gaming specifically. You have some that are for various different things. So look at what the use case is for each cryptocurrency, and where you see, do some research. What do you see the future being in that, for that particular currency? And if you think it does have some potential to grow in that industry, then you can put some of your money there. But like I said, diversify so that you don't have all of your eggs in that basket, and do it according to how much risk you are comfortable taking.
Oh, thank you so much. I think, guys, we're going to wrap up now, but I just want to say a massive, massive thank you to Cleo, Kalilah, and Selina. It's been fantastic. You know, I think we've learned a lot today. And what I'll do is I'll get a copy of your presentations as well that I can share. And also, please make sure your IG and kind of all your social media details are on there, so people can follow and kind of share and reach out to you as well. But thank you so much, ladies, for joining us. I haven't yet checked about the raffle, so I will send out a message a little bit later on the raffle and who's won, and send you a copy of your ebook as well. But thank you so much, and I hope you have a lovely, lovely evening, and join us for our next upcoming event. So thank you both. Thank you all.
Thank you.
Have a good evening.
Thanks for having me. Bye.
Take care.
Bye.
Take care. Bye. Bye-bye.